Traders, happy Tuesday. I'm Matt. He's JC with Empire Algorithmic Trading, and it is time for Vwapvision's Stock Talk.
It's where we use the volume weighted average price to analyze the stock market, and that's all we use, just the VWAP. It's the best indicator there is. And so, like I say, Matt, let's just get to it, shall we?
Let's get stock talking.
All right, I was going to say stock some talk again. I just like that. All right. All right, let's get to it. All right, Maddie. So, like I said, I just have this thing in my head that I just got to say, let's stock some talk, right? So, yeah. I saw that the indexes were down all day. Again, it was a pretty busy day. I saw the indexes were down. I was like, yeah, it's kind of what kind of what you think. We're still trading below the VWAP. Not a surprise, really. It wasn't anything bad. But then I got home and I started looking at the watch list and I started looking at the general indexes. And it was a little bit crappier of a day than what the general market would lead you to believe,
Hmm.
right? And so
Okay.
let's just take a look at some charts and just get right to it. So
Yeah.
yeah, let me see if I can get this thing to work here. All right, so we're starting with the S&P 500. We are currently at, oh man, I don't have my glasses. We're currently at 56.14, right? The market had rallied for the past couple of days. Why it's so disappointing is, as you can see on the chart, there's that red line there. That's a little overhead resistance. That's the market's first test to try and get through that. It rallied up to it and then it just turned tail today. Yeah, right. That's not very encouraging. I was a little disappointed to see that. The only thing that's good about it is the volume dried up. It was a little bit lighter than yesterday. However, it's been sequentially getting lower as the market's been stabilizing. So that is a little bit of a concern. We do have the Federal Reserve, so it would not surprise me to see some activity tomorrow. The market is going to be looking for clues to what the Fed thinks about the economy, also inflation, and what they plan to do with interest rates moving forward. And then they also doing some reading on the expectation they want to see the Federal Reserve start laying off of its balance sheet. It's been selling off a lot of bonds. They want to have the Fed stop doing that, as that'll kind of provide a little bit of a floor for interest rates and a little bit of a cut in interest rates, kind of a side-handed way like that. Quantitative tightening, quantitative easing. So if we don't get any of that, it might be an ugly session tomorrow. If we get a little bit of something positive, we very well could see a pop. But overall, it's not encouraging to see the market run into resistance first thing and then just turn south. And it kind of
Yeah.
goes hand in hand across the board. The Nasdaq couldn't even get to the overhead resistance. It sold off today, a pretty ugly gap down. It's amazing how quickly you can go from, hey, I think this looks pretty good. One session later, it's a completely different picture, and that's just the nature of the market, right? You
Yeah.
have to be, you have to be flexible. You have to go with what the market's telling you. I was liking it. Today's action was doubly bad. One, it gapped down. It straight up sold off pretty much throughout the rest of the session. It was down 1.7% to boot, and volume was higher than yesterday. So that's not good to see a distribution day so early after the market kind of is trying to find a bottom. So a
Right.
little bit of chop going on. Again, we're not, the Nasdaq is still way below its all-time high, which is somewhere between 19,000 and 19,500, and is currently trading at 17.5. So we got a ways to go on the Nasdaq. And then you look at the mid caps. I'm sorry, this is the small caps. You look at the small caps, exact same story. There's upper
Wow.
resistance. The small caps rallied literally right to it. At a little over, let's see, for our Spotify players, this is 206. It rallied right up to 206, and it closed today, it gapped down, and then closed down at 203. That's for the iShares Russell 2000 index. That's our proxy for the Russell 2000 index fund. Again, the only positive thing about that was lighter volume, so it's not an increase in selling, but there is clear resistance that we got to deal with. And then the same thing with the mid caps, kind of
Wow.
ran right into the resistance and then sold off right underneath it again. So, it's never an encouraging sign to see resistance come into play so early like that. Now, is it going to last? Again, tomorrow could be a game changer, but right now it doesn't look good. Same thing with bonds. Bonds are holding, right? So
Hmm.
that's one less thing we have to worry about. So I'm really happy to see that. So I did want to bring up the S&P 500 chart a little bit more and just kind of talk about if we are in a bear market, what are we going to start looking for support levels, right? And so I went through and I marked some significant support levels, tied them into where they are at in their all-time price. So down here at about 52.70, we would have our next support level. The market is currently at about 5,600, so that's about 400 points under. The reason why that's a significant level is it matches the peak from July of 23. The market went into a mini correction at that point in time. So you always want to set anchors at peaks and troughs. And so usually the highs tend to become support levels when the market comes down. So I've got that point marked as a support level. Underneath that, we're going to go way back a little bit further. The low of the last bear market would be the next pretty significant low spot. That's going to be down around the 4,800 level, 4,900. So we've got a ways to go before we hit that. I'm hoping we don't get there. And then, of course, the granddaddy of them all is the all-time high from the last bear market, and that's pretty much right where the price was. That VWAP is now, and that's down at 4,700. So. If we get into that problem, I would almost bet if the market gets down there, if we don't find support there, then we've got a big problem. So that's where I would be looking at. Hey, we might want to start actually changing the model a little bit and taking some really long-term positions here. In the meantime, we're just going to let the market find the support itself, right? I'm not. It's like trying to catch a knife. You might catch it here, you might catch it there, but that's a lot of knives to catch. So let's just wait. The market will pierce its all-time high VWAP. It can't go higher without it. So just let the market find the support. Let that trend get established. Then use that last bit of resistance as your point of entry. That's just the classic breakout model. You wait for the resistance to get cleared out. You wait for there's nothing but buyers, nothing but happy holders. People that are making money tend to want to hold their stocks. People tend to want to get in because the market's going up. You get that combination, it forces prices higher. Right now, we're in the exact opposite. Right now, we're starting to see average holders from months back losing money, right? And so now they're going to be kind of itching. What happens when prices get back? They're scared. They're going to want to get their money back, particularly with all the negative news that's going on. So you have the double whammy of people's high or bad expectations of what's going on in the market, plus the fact that they're losing money, have a chance to get it back even, they're going to probably sell. So that's where your overhead resistance comes into play, which is why we let all that clear out of the way. We just be patient and we just watch. Now, the leading stocks are going to break out before all of this happens. So it's important for us to watch those daily arrows. We're going to see stocks starting to break out. We're already seeing some of that happen. So it's good to see, but it's kind of disappointing to see that overall resistance level hit so soon. If it was going to snap and rally through, it would snap and rally through. I mean, Spotify is a pretty good example. But overall, the general market right now is still just finding its footing, right? So that's why we're saying just calm, just be calm, let it play out. We don't have to trade, right? The institutions, they've got to do their job. They're forced by their rules to maintain exposure to the market, right? Us, our smaller time players, we can just sit back and let them do all the work for us. We let them
Yep.
do the work. We let it figure them all out. And then once they got it figured out, then we jump on board. And like you say, that's why we use the price and volume because they cannot hide their tracks. As you can see, it plays out in real time.
Well, and it's fascinating that of all of the indexes that we watch, literally every one except for the Nasdaq ran right up to that resistance level and hit a ceiling. Like slammed their head into the rafters and had to step back and go, oh, oh, oh. You know what I mean?
Yeah, it's amazing to watch. It really is. And if you didn't know how to use the VWAP, you really would not know how to make sense of what's going on right now. And so it's why we use it, and that's why I say it's the best indicator on the market. I was thinking a little bit earlier today. I was thinking about the RSI, the relative strength indicator, and when it's above 70, they consider that overbought, and when it's below 30, it's oversold, and when it's oversold, stock's going to bounce. And I'm thinking, well, according to who, right? Like, and when it's overbought, uh, you know, when a stock's in being bought, it's going to maintain that overbought position for some time, and that's what you want. You want the buyers to continue coming in. And oversold, I don't know if there is such a thing as oversold. I know it might be a technical bounce and it might do a revert to the mean, right? If it gets a little stretched. I understand that concept. But just the theory of it oversold, I've looked at charts and I've seen them break down. They're down 50 to 60%. That looks like it's oversold. When that last support breaks, they drop another 60%. So now they're down
Right.
90, 95% off their peak. They were oversold at 60% down and they continue to go down. So then this in the flip side happens, right? You get a stock that breaks out into new all-time territory. Well, it's already up 100% from its low, right? That's overbought, man. It's already up 100%. Are you crazy? No, those things just run for more and more and more, right? Look at Appfolio, AppLovin from last year. I'm
Yeah.
sorry. AppLovin from last year. I mean, it went from, I think it was like $80. It started at like 35 and it went up to 85 and then it broke out from its all-time high VWAP and I think it topped out at like north of 400. So overbought is a good thing, right? Oversold is not a good thing. So unless you're in a contrarian, whatever. But that's a whole different risk level and that's a different
Yep.
trade setup, right? So, there's a million ways to play the market. This is just my favorite way. It's the easiest, it's the clearest. It's really helped me in my trading. It's really helped my portfolios. The only thing that I'm struggling with is how do I hold on to longer gains, right? I'm so used to getting punched in the face from all these faulty setups that I was trying to learn, all these different styles, all these different models that I'm a little like I'm quick to sell, right? Now I'll always be quick to sell on the loss side, right? If I take more than a 3% loss, I'm pretty upset about it. But I do need to learn how to hold through a little bit of the volatility on the plus side, so I could get some of those 100% gainers that we do see. So that's what I need to work on a little bit as a trader. But overall, the model is really good, man. It's gotten us
Right.
out of some pretty serious trouble. And what's really cool is it gives us a confidence level that I think most people just really generally don't have. And you can just see it right on the chart. And it plays out. So that's why we do it. This is what we're doing. We're just here to help people make sense of what's going on. It's a scary time right now. And if you weren't aware of what was happening, then you probably are concerned. Should I do this with my 401k? What do I do with my IRA? What am I doing with my funds right now? Those are all serious questions to ask. And right now, the market is telling you the market's not the place to be at this time. So it's good. There's always you just got to stay with it. Well, you're not wrong, but then also you're also not right. And so like I said, there's a million different ways to look at it. That's just how we do it.
Yeah, it's fascinating to see everything kind of coming together like that with the charts, and then also to see it kind of playing out in real time every single day as well. And like you said, I think the most fascinating part about this is how quickly something can turn from day to day. It's just
Yeah,
it's
and
that razor's edge.
it is. It is. It's pretty fun to watch. And a lot of the best traders, they react on a dime, right? They just don't second guess. They're in. If it works, it works, and if it doesn't, they're out, right? And they don't second guess, and they're never beholden to a take. They're never beholden to a position. And there's a reason why they're successful like that because of that, because their reactions, because they see the market as what it is. When it's going down, it's going down. A stock that is going up will tend to go up. It's the old physics model. A body in motion tends to stay in motion. A stock tends to stay in a trend. What we're witnessing, what we watched over the past couple of months is a significant change in trend in the general market. I believe it's a 1, 2, 3. We've talked about it before. You had the uptrend break, we had the double top, and now we have the break of the previous low. That's a 1, 2, 3 change. So that means that I'm looking for support at some of these lower VWAPs. I'm not a big believer in this right now. As we've said, I'm not beholden to that. That's just a history, right? From the last bear
Right.
market to this, it's just, okay, the model is telling me, history is telling me this probably isn't going to last. And so I'm just gonna let it see how it plays out. I'm not going to doubt if it does rally above the VWAP. I'm going to play it, right? I'm going to go in. I'm going to follow the rules. I'm going to follow the model. If it turns out it's a bull trap and I end up getting stopped out, that's the risk I'm willing to take because I don't know. It might just take off. So
Yep.
that's the way I have the model built. That's the way we're gonna trade it. We're gonna follow it, and that's the risk I'm willing to accept. Right now, it's just too much of a gamble. We just
Chaos.
don't know. And so I do want to bring up one stock today. And then we'll cut it short. Thank you for everybody for watching and listening. I want to show Micron. It's going to be kind of hard to explain for our Spotify followers, but Micron is about as picture perfect of an example of the VWAP coming into play. So here's the chart of Micron Technologies. As you can see, it peaked out back in June of last year at $153, and then it continued to sell off, and it finally bottomed out at $90. Since then, it bottomed out September of last year. Since then, it's been trading between 90 and then it's kind of progressively ran into a wall at like 115 and then again down at 112 and then again down at 111 and then again down at 107. So it keeps running into this wall. And if you're looking at it, you're like, what is going on? That wall keeps getting lower and lower and lower. Meanwhile, the lows kind of stay relatively consistent, if not kind of creeping up a little bit higher. So what is going on here, Matt? Can you guess?
I'm assuming that we have two major VWAPs that are starting to converge.
You absolutely are correct. So I kind of drew them out here. On the top side, we have the all-time high VWAP. The
Wow.
stock literally trades
Bounce.
right up to it. It trades up for a session or two and then sells off. And then down here on the bottom, we've got the long-term VWAP, which dates back to the previous high from the previous base way back in April of 2021. So the volume weighted
Wow.
average price from almost 4 years ago is playing a role in where the stock is finding a bottom today. And so that's why we use the VWAP because now here's a really good example. So this would be considered a scalp trade, right? You'd wait for it to get down around that VWAP, you buy it, you wait for it to get up to the upper VWAP and you sell it. I've tried that. Every time I've tried it, it never seems to find support at the lower VWAP, right? And then if I've tried it before, it never makes it to the upper VWAP. So after some significant failures and trying that, I'm like, you know what? I'm not even going to play that game. I'm going to let other people sort through that. I'm going to let all of that noise get knocked out of the way. I'm just going to wait for the stock to make its move and start breaking out and move higher. And when you look at Micron again, you can see that happen literally right there. And it broke out in November of 23 from its VWAP from its previous high and continued to run. That breakout, just so you know, was back in November 23 at $70 a share. It ultimately topped out at $153, so more than 100% gain. Now, it would have been difficult to ride through. There's some pretty significant sell-offs in there. However, that is a pretty significant move. But what I want to show everybody is that's what we're looking for, is exactly what Micron is doing. We have a watch list of about 200 stocks that we're watching this exact pattern play out over and over and over again. And when the market's ready to go, they're all going to move at the same time. And we're going to go from having 2 or 3 breakouts a day to all of a sudden having 25 or 30. And it's going to feel somewhat overwhelming. And so I'm excited for when that happens because it will happen. It's just a matter of time. So that is it for today's stock talk. Anything else, Matt? You got any questions? Any comments?
No, it's pretty fascinating to see. I'm really excited for tomorrow to see what the what the Fed says, and to see just how the market responds to that. You know what I mean? Because again, we're still fairly close to that upper resistance level. It doesn't mean we're going to stay below it for forever. There is a chance that with some really good news, we rally above.
Oh,
But
yeah.
the flip side is there's chance we rally down. So I'm just excited to see what happens.
Yeah, me too. Me too, man. Yeah, it's I just hope we're not in a long, protracted bear that
Same.
wears people down. I want to see this over fast, right? I want to see a good hard sell-off, get some people, the market participant fear up, see a nice big spike in the VIX, and a good washout, a good spike in the put volume,
Hmm.
and then that'll clear everybody out. But if you get too many of this, hey, it's still good, it's still a hold, and then it just that's the stuff that wears people down, and those are the ones that are tough to withstand. So hopefully we aren't there. We are in a definite change of direction. Right now we're just groping for that bottom. But yeah, let's watch it and enjoy the show, buddy.
Yes, sir.
All right, well, Maddie, as always, happy trading, my friend.
Happy trading, buddy, and thank you again to all of our listeners on Spotify, our watchers on YouTube. We thank you for joining us daily for Stock Talk. And make sure that you hit the subscribe button so you can stay up to date on everything that we're releasing daily. Make sure that you follow us on all socials: Facebook, Instagram, X, Blue Sky. And again, if you're looking for a little more information about our model, about what you get if you subscribe on our Patreon, check us out at Vwapvision.com or head over to our Patreon, patreon.com/. Empire Algorithmic Trading. You can see a little bit more about what exactly you get with a subscription there. But the big thing is our daily arrow signals. As JC's talking about, you can see 20, 30 different green arrow signals when this thing turns around. That's where it gets to be a lot of fun, and all for just $20 a month. So make sure you like and subscribe over on our Patreon as well. That being said, Jace, you have an excellent day. And again, happy trading.
All right, buddy. Happy trading. Talk to you tomorrow. Or actually, we'll talk to you arrow review. All right, we'll see you in a little
Arrow review.
bit.